In this video, I'm going to talk about four of the most basic aspects of trading: price targets, price action, trade setups, and risk management. Now first, price targets are areas on the chart, if we can locate them, where prices are likely to trade. Price action is observing how prices are moving. Trade setups are areas to determine where we should enter a trade based on the price action and the targets. And risk management is how to enter those trade setups, or how to enter a trade, or where to enter a trade in order to limit risk if the trade goes against us. So let's get started. So the first thing is we want to locate possible price target areas. Now here's a chart of the S&P E-mini futures market from Wednesday, September 6th through Friday, September 8th. And in this chart, this is a chart during electronic trading hours. Now the S&P futures market trades continuously. So what we want to do is locate where targets are. And the easiest way to find where targets might exist is to find where gaps exist. Now we're not going to see them on a chart during electronic trading hours. So what we want to do is switch over to regular trading hours. And so switching over to regular trading hours, we see definite gaps exist on this chart. And there's a gap that existed that opened up here September 5th, where it wasn't filled on September 6th, and again on September 6th, where the market opened on September 7th well below and didn't finish it on September 7th, but actually closed that gap on September 8th. So it took 2 days to close this gap. This gap is still open, but these are price targets. Where is the target? Right here, where the market closes, 44.69, 44.70, which closed on Friday, but here's another target at 45.02, way up at 45.02, that has not closed yet. It will close. It's just a question of when it will close, but this is a target. So that's the most basic way to locate price targets on our chart. So now that I have my target levels, I switch my chart to the electronic trading hours, and I set a 3-minute candle. And this is my chart about an hour before the market opened on Friday, September 8th. And I put those two price targets, 44.70 and 45.02, on my chart. And so I'm going to bring my chart over because the day is finished, and I want to talk about price action to give further evidence or further information as to where prices are likely to trade and where trade entries can be made. Now first, I want you to notice that the market opened here at 44.55, closed the gap at 44.70, so it was good for a 15-point profit if you made this trade. So having this information, knowing that a gap existed at 44.70, was worth 15 points. But I use other tools, and I'm sure you use other tools, indicators, to help you trade. One of the tools that I use is the stochastics, and I use the stochastic indicator, relatively fast indicator 733, and I use that in conjunction with the Taylor trading zone. And I put the Taylor trading zone on my chart every day using Taylor's trading technique. I recommend to everyone to read George Taylor's book, The Taylor Trading Technique. It's also known as the Taylor Book Method, but it's a very useful tool to determine areas of support and resistance, buy zones and sell zones. I recommend that everyone purchase the book. Difficult book to read and understand, but basically the numbers are calculations of averages, and there are 12 calculations that go into it. This is what the Taylor calculator looks like. You can either figure it out from reading the book, it'll be very difficult for you to do so, or you can get it from my site at timelessdollar.com. Here's my chart on Friday, September 8th. I've placed the Taylor trading zone on it, the previous gap, and the stochastics, of course. And now we want to look at price action to complete the picture of how to determine where the market is likely to trade. Now, first of all, you'll notice that prices did close the gap, a target. But I also want to tell you that the Taylor trading support and resistance also are target numbers. The Taylor resistance number at 44.52 was a target, although at the end of the day, the Taylor support number did not come into the picture. The Taylor range, though, was very helpful in determining other information. We want to look at price action to tell us where to make our trades, where to place our trades. And to do that, as prices develop throughout the day, we can see an area where support and resistance was put in. And I'm going to put lines of support and resistance on my chart. As the day progressed, we have a support and a resistance area, and we can see prices moving between support and resistance, but there's something else here. We first want to know, an important piece of information is, where is the market going to go? And so the Taylor trading zone is helpful with that as well. Not the actual resistance and support numbers, but the range. And in order to use the Taylor range, we use a technique that we call transposing. And transposing Taylor's range is discussed in my site at timelessdollar.com, and you can read about that. But the Taylor trading range is also very helpful in determining where prices might trade. And so what I do, if prices trade outside the trading zone, or even if they trade within the trading zone, I use the range to determine where prices might trade. And so what I do is I find the intraday high or low, which is usually put in within the first half hour to an hour of the day, and I take my Taylor trading zone and I clone it, and I move the clone to the support, to the intraday high or low, and I'm going to move it to the intraday low right over here where the market opened 44.55. And I did this early in the morning when I saw, well, not too early, about at 10 o'clock, where I can determine that prices had reached their intraday low over here. Of course, there was no way to know they were going to go lower, but from what I could tell at 10 o'clock, this is where the intraday low was. And I took my trading zone, transposed it to have the support number at the intraday low. And that told me that based on the range of the day, prices were going to trade somewhere up here at around 44.76. And it's exactly where prices topped out, 44.76. So that's how another way to use the Taylor trading zone. Now, I'm going to get rid of this, and I did say that I want to discuss price action. Price action, we can, of course, determine areas of support and resistance, and that's pretty easy. But also there's something else. In looking at prices, notice over here that prices made a high of 44.77 at 10:30. At 11:30, prices made another high, or tested that high, at 44.75. Didn't take out the previous high. And again, at 12:30, prices tested the previous high at 44.75, didn't make it. So prices were making successively lower highs. So that could give us a clue that prices were headed down and that they made their high of the day here at 44.77. Which, of course, is exactly what happened. So we have price action giving us indications of areas of support and resistance, and we have the knowledge that prices were moving successively lower throughout the day. And where prices ended up, of course, they did hit the Taylor calculated resistance number, which became support. Now, there's one more thing to look for, and that is the trade setups within the areas of support and resistance. And so we can use our trade setups, and if you've taken a trading course, I have one at timelessdollar.com that incorporates trade setups with risk management principles. And so risk management is an important concept when we're talking about trade setups and where to enter a trade. So trade entries, and we can see it right over here on our chart, where to make a trade entry based on previous areas of resistance and support, and with reasonable risk management levels, putting stops just above and below areas of resistance and support. So that's how we use price setups together with low risk management techniques to help us make more profitable trades more intelligently, using the price action, trade setups, price targets, risk management, and a Taylor calculator and the stochastic. You can get more information about the Taylor trading technique, the Taylor calculator, and of course my trading course at timelessdollar.com. I hope you liked this video. If so, please subscribe. In the meantime, thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.